Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's March 21st. This will be our chart lesson for the day. And as you can see, the move continued up today. Um, we may finally be topping out up here. I'm not ready to say that yet, but it does look like this midline on my green is fitting uh, really well now. And we did turn down at that spot. Um, we did push through this gray one a little bit. We could get an overshoot on it maybe. Maybe it needs adjusting up a little bit. Actually, it looks like it needs to be adjusted down if anything. But anyway, there it is. You can see another rally day, and we're getting into the oversold territory up here on based on the envelope bands. We're closed well into that band. Maybe at the top of the green channel finally. So this may be the spot where we finally correct a little bit because we finally reached the high. So we'll have to see. We'll see what tomorrow brings. But it is Thursday, so no chart lessons on Fridays. I stopped doing them on Fridays just to get a little break. Um, there were a couple of news items today. The unemployment came out at 7:30, so you had to be flat on that. And then there was some manufacturing stuff. This stuff doesn't usually affect the market too much. But right now, the way the market's been with any high volatility news, you're best to be flat a few minutes into it. The FOMC, like we talked about yesterday, be flat an hour before. But on these others, 10, 15 minutes is plenty. 10, maybe even 10 or 5 minutes, depending on what the market's doing. I probably wouldn't take a trade within 10 or 15 minutes of it because you may not get out before the news, and you might get stuck in a news call and something crazy happen, and you get stopped out on just because of the news item. So just be careful with that. Um, and something else I wanted to address real quickly in today's video. I'm getting a lot of requests for people that want one-on-one training, one-on-one mentorship. People complaining that you can't learn this without somebody teaching you one-on-one and that kind of thing. But I'm going to tell you, this is just my opinion. Take it for what it's worth. But this is my opinion after having done this for 25 years, knowing exactly what it takes to do it, having trained a lot of people to do it. Mentorship is a waste of your money because the amount of money, if they're not charging you a bunch of money, they're probably not a good mentor, and you'd be better off to stay away from them. I mean, people send me their charts, and they're going to other sites, and people are trading what we are, and they're watching, and the stuff I see. I'm not saying everybody's wrong, but the stuff they've sent me is just off the chart, not even what we're doing, and it's really, if you want to learn what we're doing, stick to what we're doing here. If somebody else has something that works better and you think it's going to work better, then by all means go there, but don't try to mix them up. I'm just telling you, the charts I'm seeing are ridiculous. The comments that on the marked up charts are ridiculous. And I don't even know where they're coming from. I don't ask. They just send them and say, somebody teaching your stuff over on another site, this is what they're saying. Do you agree with this? And most of the time it's not even in the right ballpark. So if you want to go to those other places, go on over there. But I'm just telling you, you're probably wasting your time. You're probably going to set yourself back. But that's not really the point of this little rant I'm about to make here. The point I'm trying to tell you is mentorship. The reason this is so hard to do is you need experience. You got to be able to beat professional traders. And the reason you can't beat professional traders is because you don't have enough experience trading this. You can learn this strategy 3 to 6 months, definitely by a year, but it doesn't mean you can trade profitably that quick. You can learn the strategy, and you can learn to pick out the trades and mark up the chart after the fact, and you can do it pretty quickly if you catch on right. Some people don't ever catch on. Some people it takes them longer than others. But I'd say plan on a good year to learn, 8 months to a year to learn the strategy and be proficient at opening up a chart and marking it up and finding the right trades and stuff. But once you do that, that's just this, you're just at the very beginning. The problem is you need lots and lots and lots and lots, and I can't emphasize that enough, lots of screen time doing this. It's just like trying to learn to play a piano. You can go get a piano lessons from somebody and they can teach you the basics and the notes and how to play, but how are you ever going to be able to play professionally? You got to sit down and practice every day and practice, 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 lots of practice over and over and over, and it takes years because it's a skill. Reading this chart and trading is a skill. And when the sooner you understand that and the sooner you get to work doing what it takes to improve the skill set at it, the quicker you're going to get better. But you're still going to need lots and lots of hours at the screen time. When you compare, I figured it up. There's about 264 trading days in a year. And I've been doing this 25 years. So you just say, I'm going to be conservative and say, out of those 264 trading days, I probably trade 250 at least. Used to, I traded them all unless I was on vacations. But just say 250. And in the early days, I was here 8 hours a day looking at the chart. But let's just say conservatively, I get 6 hours a day. So that's 1,500 hours a week. Or I'm sorry, let me back up. 264 times 6, that's 1,584 hours a week. That's probably not enough to get proficient at this. So that's a whole year of doing it 6 hours a day. But if you figure that times 25 years, I got almost 40,000 hours of screen time. Think about that. Compare that to your experience, and maybe it'll put it into perspective. What I've been able to see after 25 years and 40,000 hours of sitting at the screen, and I'm being conservative, I probably have more hours than that. Where some of y'all are trying to trade 2 or 3 hours a day, 3 or 4 days a week. Let's just say you're trading 3 hours a day and you're trading 5 days a week. So you're still going to get your 250 days, but at 3 hours, that's only 750 hours in a whole year. That's nothing. That's kindergarten. So that's the part you got to understand. That's why this is so hard. It's a skill. And you need lots of hours, and the only way, nobody that's probably listening to this can afford to learn to trading live. And that's where the real disconnect comes in. People come in and they want to go and trade live. They want to play around for 2 weeks, read a manual, watch a few videos, and they want to go trade live. Well, guess what? If you do that, what's going to happen? You already know. Most of you have already done it. You're going to be a donor. You're going to donate your money. You're going to say it doesn't work. You can't do this. This is impossible. But all it is you have unrealistic expectations. This is a skill. And just like playing professional baseball, playing professional music, playing professional football, playing professional basketball, in order to play with those professionals, you got to be as good or better than they are, or you're not ever going to play with them. They're going to beat you every time because they've honed their skill over years and years. So understand that. So this is playing a musical instrument is probably the closest thing I can come to this. But like I said, you can hire a mentor, which you can buy a manual or watch our videos, and you can get the basics. But the only way you're going to become really skilled as a trader is practice, practice, practice every day. You need to be on the simulator, and you need to trade as many hours a day as you can get. You need to take every single trade you see that you think fits our criteria. Don't worry if you're right or wrong. Take the trade. Don't monkey with it. Let it play out. And then at the end of the day, worry about whether you were right or wrong. Go back, study those trades, figure out what you did right, reinforce that, do more of it, figure out what you did wrong, and learn from it and correct that the next day. And you'll find what will happen is you'll find you're making the same mistakes over and over. But you'll start to learn your own tendencies and what those mistakes are, and you can slowly correct them. It takes time, and then you got to be disciplined, you got to be patient, you got to wait on the trades. You only take the ones that meet the criteria. If it doesn't meet the criteria, don't take it. Don't monkey around playing taking trades. Well, this might work. I like this trade. I like what it did. It doesn't really quite fit the rules, but I like it. Don't do that. Take only the trades that you think meet the criteria to enter the trade. And if it does, take it. Don't worry if you're wrong or right. But you got to be on the simulator, because if you're trading live, you can't afford to take every trade. And you can't afford to be wrong, ever. So you got to do this on the simulator. I wish there was a simulator when I started. When I started, you had to order your charts, and by the time you got them, they were super expensive. And by the time you got them, they were old. So you're learning from old charts. If we'd have had what we have now, I probably could have learned twice as fast. But we didn't have all this stuff back then when I first started trading. So understand what you got to do. You got to get on the simulator. You got to get as much screen time as you can. If you're reading a manual and watching some videos or listening to some guru, and for a month or two or 6 months, and you think, man, I've been doing this for a year or two and I ain't gotten anywhere, and then suddenly you're going to try to trade live, I'm telling you, I'm not guessing, I'm telling you, I know you're going to be a donator. You're going to donate your money to the skilled traders every single time. You might make a winning trade here and there, but in the long run, you're going to lose money, and those guys are going to take your money from you. So listen to what I'm telling you. Get on the simulator. Trade as much as you can. People that are trying to learn this part-time, it's going to take you years and years. Just accept that. Or either give up, if you don't have that time to commit to it, then just put it aside. Do it as a hobby. Don't lose your money, because you can't learn this part-time in a short period of time. I don't care what anybody tells you. If anybody tells you different, in my opinion, they're just trying to siphon some money out of your pocket. Listen to me. I got no reason to tell you any different other than what my experience has been. And this is a skill. And like any professional skill, it takes years to hone it, because you've got to be able to, it's a zero-sum game. And what do I mean by that? In order for you to make $1, somebody has to lose $1. And the skilled traders do not lose, not very often. They're going to win 90% of the time, and they're going to take your money. And if they don't get it on this trade, they're going to get it plus some more on the next trade. And that's just how it works. 10% of the traders make all the money, and the other 90% that are day traders are just donors. They're simply donors, and we need new donors. And there's constantly a new influx rolling in. And they do the same thing. They read a book, they read a manual, they watch some videos. They do this if they're really disciplined, they do it for 2 or 3 months, and they start trading live, and they wonder why they can't make any money, because they're not skilled enough to read that chart yet and to understand. If when you do this long enough and you watch the screen long enough, you'll start to understand what prices are doing, and you'll be able to predict where they're going at a very high clip in the very short term. We don't never know where they're going exactly long term. I mean, I can pick some targets out that you would think we'd never reach, and do that almost every day, and lo and behold, prices go straight to that target. But that's a skill. It takes time to learn that and to see that. But everything that I'm talking about is on our website for free. Now, it's hard to put together, or you can spend a measly $100 that you'll pay for in one trade once you learn how to do this, and you'll have it all. Plus, and I recommend the videos too. I'm not trying to sell you anything. Like I said, it's all on my website for free. You don't have to pay a dime. It's going to take you longer to put it all together and figure it out, but it's all there. And I got people that email me every day asking me questions that have never bought a thing from me. And I've always tried to answer them. I'm getting to the point where I'm not going to be able to do that anymore. I'm going to have to start telling people, if you haven't purchased a membership or purchased a manual or something, I'm just not going to be able to answer your questions anymore. I've always tried to answer everybody's questions. It wasn't about the money, and it's still not about the money, but it's about the time and the management. And I just can't answer hundreds of emails for free every day. I mean, I got a life, and I got a job, and I've tried to do that. And so I'm going to concentrate on the people that are committed to me, and I'll be committed to them. If you have never purchased anything from me, I'm probably not going to answer your emails anymore. I just can't do it. It's just too much work for me. and I can't really delegate that kind of work because nobody else has the skill set to do it. And so if you want to know my thoughts, it has to come from me. So anyway, this video is going to be really long today because we haven't even got into the trades. But I just felt like this was important because there's so many people just spinning their wheels and losing money and wondering why they can't get better. And I say this all the time, but people don't want to listen or they don't believe me. I think most people are just too eager to start trading. They need to make some money and think, oh, this would be a great part-time job to make some money on the side. No. Go get a job at Publix or Kroger or whatever, a part-time job, or go down somewhere and get a part-time job where you're guaranteed to make some money. Because if you think you're going to come in here and part-time in a few months and make a little money to subsidize while you're laid off or sick at home or whatever, it's just a pipe dream. That's not going to happen. This is too hard. It's not as hard as people think it is because most people have unrealistic expectations. If you have realistic expectations, this is not that hard. It just takes a lot of time because you have to practice, and there's some people that are never going to give it that much time. It's like trying to be a doctor. Why isn't everybody a doctor? Well, some people aren't smart enough, but there's a lot of smart people that just wouldn't dedicate 15 years of their life to be a doctor. It's too long and too hard, and they're not dedicated enough. They don't want it that bad. It depends on how bad you want it, how dedicated you are, and how long you're willing to stick to it. So anyway, that's enough for that. Go back and listen to this a few times if you need to, but I hope you take what I'm telling you to heart. This is a skill, and the only way you're going to get better at it is to get that screen time, and you can't afford to do it live. So quit trying to trade live. Get on the simulator and get as much screen time taking every trade you see so you can study that trade and learn from it. If you're just coming in taking a couple of live trades every day and you lose a few and you win a few, you're not going to get any better. You're not going to improve. You're not getting enough practice, and you're not studying either. You got to study those trades. And 2 or 3 a day is not enough. You need more than that. Some days you may not get any more trades than that, but most days, especially when the market's moving like it has been lately, you're going to get 8 or 10 or 15 trades a day. And you need to take them all if they fit the criteria. So don't worry about, eventually you want to double a 10K account on the simulator. But long before that, you got to get the experience. So you'll start to, if you do what I'm telling you and you're practicing every day and you're studying, you're going to get better each day, and you're going to start to notice how much better you get because you're getting that experience. And you're going to start to notice that, and you're going to get better and better. And then you're going to say, oh, I'm getting it now. I see what he was talking about. People always come back and say, Mac, I heard you say it 1,000,000 times, but it just didn't register. Bang this into your head and make it register, because this is the key. This is the holy grail. That's the only holy grail there is in trading. There's no indicators. There's no software. There's no magic bullet. There's no special pattern. There's nothing like that you can learn and make money every day trading. It's impossible. You got to learn to read this chart, understand what prices are doing, where they're headed, and then you can use the tools we teach you to help find your entry and narrow in your timing and your entry point. That's all those patterns are good for, is to narrow in. Without understanding the context of this chart, those patterns are worthless. The two-legged pullback to the EMA is powerful. Don't get me wrong, it's powerful. And you'll win a lot of trades just taking that blindly. But you're going to still have losers if you don't know how to filter your trades and understand what prices are doing, because there's second entries all over this chart. So you still have to learn to read the chart and understand what prices are doing and where they're probably going. That's the key to all of it. So anyway, let's get to the trades. 20 minutes here and I ain't even talked about the trades. But I think this was an important conversation because I'm getting these emails left and right constantly lately about mentors and mentoring me, and so-and-so over at this site says, I need a mentor. Will and don't waste your money. The money, you need that money in your trading account, because you're not going to learn enough from them. to change your trading in any way. I can guarantee you that. Now, if they're helping you learn the basics, yeah, they might. I'm sure they can help you learn the basics, but you can learn that on your own. You don't need them. It might take you another month or so to learn the basics, but that's not the key. The key is the experience and the time at the screen, seeing it happen in real time and trading it. And you can't afford to do that live. That's just all. I'm just telling you. Notice, I bet there's nobody listening to this video that could afford to lose $1 million over the next few months. And that's what you're going to do if you have that much and you keep trying to trade. You're going to lose $1 million. And some fat cat's going to be taking it to the bank every day that's got experience and knows what he's doing and laughing all the way to the bank. You're going to be his ATM. Don't be that person. Do not be that donor. That's the best advice you could ever get from me. If you don't learn anything else from my website or from Mac, make sure you learn that you do not want to be a donor, because the market needs them. Just don't let you be that person. Let somebody else be the donor, and you eventually be one of the guys that takes the money from them. So believe that if you want. Take that with a grain of salt, because, eventually if you ever make it, you'll be one of those that come back and say, Mac, heard you say it 1,000,000 times, but I never listened. If I'd have just listened earlier, I'd have got here sooner and I'd have lost a lot less money, a lot less headaches. I'm telling you, the people that do the best at this, that learn the fastest, are the ones that come in with no trading knowledge. None. They come in green. And they don't learn all the bad habits. They don't listen to all the other gurus, and they don't listen to the BS. They come in and they do what I tell them to do, and before you know it, they're having success. And it's because they listen to what I'm telling them, and they don't have to unlearn all the craziness that you learn out there and you hear from other people. And what really irks me is that, somebody sends me a chart and says, hey, this guy's teaching your strategy. I've been following him some, and he sends me his chart, and it's all marked up with all this stuff on it, and it's a joke. It's a total joke. They're not even in the right ballpark. And you're trying to learn our strategy from them, and they don't know their head from a hole in the ground. I'm sorry. I mean, I'm not saying that every person teaching my strategy, that's them, but the ones I'm seeing, I wouldn't waste my time with them. I'm just telling you that. And that's not because I want you to come to my website. It's not because I want you to watch my videos. I don't make any money off this YouTube stuff. It's peanuts. I spend 2 hours probably every day putting up YouTube videos 4 days a week, and I think my check's a couple of $100 a month. If you think I do this for that, then more power to you. But I do the teaching because I love trading, and I love helping people, and it makes me study my chart every day. It makes me better. That was originally why I did it, because I'd mark up my chart, and I said, well, I'll start sharing this with everybody else so they can see the trades too, so they won't keep emailing me, and they can just go watch the video and take some pressure off me. And that's how this came about, because it's how I studied my chart every day. So anyway, 23 minutes and still haven't talked about the first trade. I'm done. I promise. We're going to the trades here. If you don't want to listen to this part, skip over it and watch the trades. And when you can't find success, don't complain. That's all I'm going to tell you. So here it is. Here's the daily chart. Let's flip over to the intraday and go through the trades. And I'm going to probably have to move through them quickly, because it's going to be a 40-minute video. Okay, no more BSing around here. No more rants or soapbox from Mac today, I promise. Here's the chart. We started off with a trend up, had a break, moved to a new high, and then we had a trend down. Simple as that. Perfect price action. Had a trend down, finally had a break down here, and that took us into the close. So after it's 4:15 now, so the market's closed. I started this before the market had closed. It was getting closed, but probably wasn't any more out. But let's zoom in, go through the trades. There's 2 news items today that were read. Neither one of them really made any noise, but for right now, the way the economy is, I don't think you can ignore any kind of red news, especially unemployment. Usually lately it's been acting up. It didn't today. There it is right in there. Then you had the PMI manufacturing stuff here. That was at 8:45. Didn't really make any difference. So uh, anyway, there it is. You don't want to ignore it right now. So stick to it and be flat. Like I said, 10 minutes or so. But 7 o'clock came as we're coming up through here today on this rally. Trend's coming up, and by the time you could really take a trade, you were in the news item. And then here you got a triple test. There's not a lot of room back to the high right there. I'm kind of wary of that one. But it is a triple test. Prices are working higher here. It is off the EMA. You do have a strong support right there. Um, if you could get in this and it back up, I'd probably mark it blue. But I don't know that you could. I marked it green. It's a little aggressive because there's not much room to get out, and you got to be careful with that. But you can see it took off, and it was a nice trade. And of course, now you got a failed breakout. As I always say, you're better off to wait on a lower high, just to be sure that you don't get burned on the way up, because we're not back up to where the possible high is here. It doesn't mean we won't turn down here either. At least come back and test the breakout area and test the EMA that we pushed through, or midline. I'm sorry, that's the midline coming there. And so we've been above the EMA, but we were coming. When you break out there, you're almost always going to come back and test it before you go on, even if it's going higher. And when you push through an important support resistance like that midline, it'll usually pull back and test that too. So you expect prices to come back, but wait on a lower high to make sure your timing is better than if you just try to pick up here. But notice how far we are away from the EMA. It's probably going to fail and come back. It's a really bearish bar. So it's probably, if you want to be aggressive, it's one you might be aggressive on. But if you want to make sure you're profitable and stick to the rules. I mean, this follows the rules, but it's just a little more aggressive. You want to take the sure things, and this is not a sure thing. That's the problem. That's the difference between it probably fits the criteria, but it's not a sure thing because you need to wait on a lower high to make sure. Even then, it's not a sure thing, but it's closer to a sure thing than taking that first breakout. So there. Now you got to trend back. You got to close outside, move to a new low. Now you're taking off to the upside again. Unfortunately, there's no setup here to go higher with it. I think we made a lower high here, but I'm still not crazy about it. The low is 1150. I can't tell. I'm unmarked over it now. I think no, those were equal lows, and so you couldn't enter there. Somewhere here, I think I saw one that it ticked back, but it still wasn't a great setup. Even if it was a one tick lower and turned up, you have to wait till this closes and then you're going long at the high of that move. Just not a good idea. But we turn back down. You do get a lower high here, but we moved too far to be tradable. That's just not a tradable lower high. So you got to sit tight. And then notice that we confirmed that trend line here. We got your first couple of swings. You could almost argue it confirmed it here, but definitely confirmed it here. Then it comes back and confirms it once again. No setups here. But then you get a first entry short, goes higher. You get a second entry short. So this is a continuation pattern. This is a failure off of the key entry point. And there's also a short-term key entry point. Now, this is a more advanced trade. Unless you've been trading for a while and profitable, you don't probably want to take this trade. Now, I say that all the time, and then some Yahoo will send me an email asking about a failure and why it failed, and they're not even trading it right. So until you understand, there's a reason I don't teach them in the manual, because they're hard to learn. And you need a lot of experience, like I talked about earlier. This is a skilled trader's trade. So if you're not a skilled trader, which 90% of you, 95% of you probably aren't, don't take this trade. Listen to me. But there it is, a failure on a continuation pattern, and there it goes, boom. And then you get a first entry there, and then you get a break. And that is a second entry, but it's an inside bar. Stay away from that. And then we're just kind of chopping sideways, no trades there. You break out. I meant to mark that one green right there because it's the first breakout. Way away. It looks very similar to this one. But then there's your lower high. Actually, let's do this again. I meant to mark that one green. And we're in an uptrend too. So that now we're definitely in an uptrend. Over here, this looked kind of like it could be a range, sideways trading. And we're still working sideways, but you can clearly see the range, and it's an uptrend. So here you probably definitely want to wait on the lower high. It's a second entry short. Technically, it ticks one tick lower right there, but I'd still treat that like a second entry short. And boom, look at it go. Nice trade, easy win. And this is a double top here, so you got a leg down, first entry, pulls back, the support holds again, breaks above that. That's a second entry long. We're not really looking for second entries here, but it's just a bounce off the support, and it happens to be a second entry. Go long right there. And you can see it only went about equal to that last one. You need room to get out before here, and you do, and you get out, and it comes back, and now it hits the trend line. And it actually breaks lower, fails, and turns up. This is one, let me zoom in here where you can see this. This is one I wouldn't mind. You can see that big bearish bar, and when it ticks like a tick or two and reverses on you like that, it's probably, especially at a key entry point, it's probably going to trap a lot of people. Have your buy stop one tick above that and go with it if there's room to get out before these highs, before the high of the range. And it's probably going, after a failed breakout out of the low, it's probably going to break out the top, because this is going to give it a lot of momentum, because everybody that went short down here is taught to put their buy stop up here, and that pushes it up again. It'll probably fail when those stops are running and come back and test it, just like it does when it fails. Sometimes a failure out one side will send it rocketing the other way because the market was going to go up anyway, and they just tried to get momentum to get it past that resistance point. And that's what they did here. They break it out the bottom, and all these people have been taught to sell down here, exactly the opposite of what you really need to do. And I tell you, that's always, as long as I've been trading until I figured this out on my own, everything I read, that's the way they teach you to trade it. Sell on a breakout of the bottom, buy on a breakout of the top, and put your safety stop on the other side. And so they push it through here, and they fill all these sell orders, and all their safety stops are buy orders up here. And so then they reverse it, and the buying comes in, and once they hit them sell stops, boom, it rockets it on out the other side. See that over and over. It's like clockwork, and yet I still see people teaching that you sell up here and buy up here when you do just the opposite. We're chopping along. I don't see any trades in here you want to trade. This is tempting to go long, but there's not much room back to the resistance or the EMA or the midline. You're not as worried about sideways as the EMA. You're more worried about that midline. There might be room to that midline, and you see where it turned down right at the midline. I mean, there's just enough. Actually, there's not. So if you took that, you'd have got burned, because you wouldn't have got. There's not 6 ticks there. It'd been a 4 tick failure. You'd have got to 4 ticks and couldn't push through, and it would have reversed on you. And boom, stop you out. You got a trend working down. You got a close outside. It tried to retest the low several times and couldn't. If you'd had a little better bar here, I'd say go long right there, but you don't. And so you really miss out on this move up here. And then you're chopping sideways again. I like this one, just simply because it tries to go lower once, twice, 3 times. If it breaks above that one, I mark this one green because it's congested. But if it breaks above, you probably get a winner out of it, which you actually do. But when it comes back here, you get a definite sure thing triple test. And you got plenty of room to get out now. And you see this was a nice, easy one. That's the smart traders take that one. A few of the more aggressive ones enter here, and it works. But when it comes back and gives you that triple test with a nice signal bar, all the smart traders say, okay, there's what we're waiting on. That's the sure thing, and boom, you see, and it's a sure thing. You don't get a big run or anything, but it's an easy scalp. That's all most of these traders want, is their scalp out of it. Then we start working down. Now there's a shorter term trend down here. Some people always ask me this. You didn't draw it off the first 2 swings. Well, I drew it where it fits. But there's a shorter term trend right here. Let's go ahead and put it in there so people can see it and don't get confused. There it is. And you get your braking U low and it bounces. But if you back out here, you can clearly see that's a that's a that trend channel is perfect. That's the accurate trend channel in the bigger picture. Now, yeah, there's shorter term pictures in here, and you should draw them. I didn't draw this one because there were no trades on it. Nothing I was willing to take. You could argue there's a failure here, but this is not where you're looking for a failure to go short yet. There's no key entry point there. You've already had a break of your trend line. You didn't get a confirmation of that short term when it just got a break and you low, and then two legs up. There's a second entry short right there, but the signal bar is not good enough. There's a lower high here, and normally that's because that's a match, two bar matching. You treat that like a new high, so you could go short below that one and treat that like a lower high. And then you get another one here with a runs up, first entry, runs up, second entry. That confirms that trend line right there. Nice signal bar, second entry short. Look at it go. There's a lower high here, but it's right into the midline. It's moved too far. And then you get, off the low side, you get a first entry, second entry, right at the EMA and the EMA and the midline. Now, normally I'd probably say, that's a little risky, but it's sideways and there's a range there too. So you could trade that as range rules as a 1, 2, 3 triple test, plus it's a second entry at the EM. You got the EMA behind you, you got the midline behind you, and you got that range resistance. So there's three different things of resistance there that is probably going to send that lower. And there it goes. Hits the bottom again, and now you're working higher. There's a second entry here, but we didn't quite get back. Really, this is your signal bar, and it's not bearish enough so you can't take it. And we didn't get back to the trend line, so you got to wait and hope you get a setup here, and you don't. It's a shame because it's a nice move back down to the other side. And then you get another second entry here, but you don't have all that resistance. You could still, and that looks a little congested, you could still argue for that to be green. But I'm probably going to skip it now because you're getting late in the trend and you don't have your resistance. You're not really back to the EMA. All you really have there is the midline. And we pushed through that the last time. So it doesn't mean you're going to turn down there again. It runs up, and there's a lower high here, but again, just two sideways. And the next thing you know, we make a triple bottom here. It's tempting to buy that. You can clearly see that triple bottom. Boom, boom, boom. And you could, that's a decent signal bar. If there was more room back to the EMA, I might say, hey, this might be worth taking a chance. But we just came off the high, and we haven't got back to the low. So that means one or two things. It means either we got more room to the downside, so you could tick higher and turn down, or it could mean that we're going to get a break, and it actually leads to a break. So you got a green channel here. I guess I forgot to color it. And you get a break, new high, and that's tempting to short. But, I mean, that one's really tempting because it's only 4 ticks. And if you did take that this is my rule on the engulfing bar in a situation like this. Timing is everything. And sometimes your timing will be off. And it'll break lower and then turn up and for 1 or 2 ticks and then turn back down. Well, the way you usually have to play this, if I entered on this bar and it went lower first and ticked me in and then turned back up, if I still like the trade, I'm probably going to go find the last swing, which is way up here, and put my stop above it and wait for this bar to close and then put my safety stop 1 tick above it. Now, again, this is more advanced because you need to be pretty sure you're reading this chart right, and there's a good chance it's going to go lower again. Because if you're wrong, you're just going to take a bigger hit by moving your stop. But that's how I play that. If I take that trade and it does that to me, I'm not going to let that 1 or 2 ticks stop me out. I'm going to put my stop, and we put it where we put it for a reason. So just remember that. Don't ask, why do you do that? Because we're trying to protect our stop. If it goes through that, then it's probably going, then you want to put you're in trouble. So, but if you look at that, how many more ticks is that? Let's see. So you're going to take on another 3 points to do that. But you would have survived it at the same time. So it depends on how much risk it is, how confident you are in your read. Again, it's more advanced. So if you're not advanced, don't do that. But anyway, I didn't mark anything here because I just think it's too risky. Again, that's tempting. And if you did get suckered into that one, if you wait till this one, you've bounced off the EMA twice, and this could be a third bounce, which would send you another leg up probably. So you want to see this close below that first, and it didn't do it. So I wouldn't take this big, especially on a bigger bar that's 11 ticks. I mean, that's not huge, but on a day like this, that's a pretty big risk. So if you didn't enter on this one and get caught into this engulfing bar, because I'm not sure which way this broke first. It might have broke higher first and then turned down. If it did, go ahead and sell right there. Put a sell stop and sell, and put your stop 1 tick above that like you would normally. Again, I usually want to wait for it to close to make sure where that high is going to be. So again, I'd probably still put my stop up here. That's just the way you have to play these engulfing bars, because you don't know where the high is going to be till the bar closes. And your safety stop's not going to be safe unless it's above 1 tick, at least 1 tick above that signal bar. And even then here, you would have scalped out, but even then they still came back and ran those stops before it sold off again. So, I mean, the volume has been really low, and you can see even in the after hours, the volume was really low here. Unless I'm missing something on my chart. I'm going to pause this and reload it just to make sure I didn't miss. I mean, you can still see it closed at 2:30. That just seems really low for after 2:30. Don't trade after 2:30. Somebody asks me that almost every day. Maybe, if you get a set up 1 or 2 minutes into the 2:30 hour, take it. But if it's a sure thing, but otherwise don't take it. But I'm going to pause this a minute and reload this. Just make sure I got all the price action, because this doesn't look right here. Okay, I reloaded this, and you can see there was some additional price action. It didn't matter. It was after 2:30. I had everything up until I think right in here. Why this didn't load, I'm not sure, but I knew it didn't. It looked like there was way too low a volume. Even on a low volume day, that seemed way too low a volume for the last hour and a half or whatever of trading. So, but there's the actual price action. I added it, but it didn't change anything else here. The only other thing that I meant to talk about was 2 other things right here. Notice you got a new swing high here. It's higher than that little double top. This is a little, this is a little more advanced, but because you got a trend down and you didn't get a new low, but you got a new high, first entry, so a break above that second entry. If you had a little better signal bar and more room back to the EMA, I'd say you're probably going to get 2 legs here, and it's probably worth taking. But then, so we got the 2-legged correction, and then we tried to go lower once, twice, and still couldn't. So then you got a second entry long after trying to go short 2 more times. Yeah, if you might go long right there, because notice the new swing high, it's higher than that one. So first entry, second entry. And you also got 2-legged correction. Didn't draw this here, but it's there. There's your little trend, your break, new high. So that could mean then you're going to get a couple legs to a new low, but you got a couple legs, it still couldn't make a new low. In fact, it makes a higher low, which is, if you got room to get out right there and you got a really good signal bar, take that. If it was a really good signal bar, I'd probably make it blue, but it wasn't. So I still marked it green. And I forgot to talk about that little section. I meant to just talk about that earlier, and I skipped over it trying to get through with this thing, but I thought I'd come back. But anyway, that's it. I'm off my soapbox. I'm done with the trades. I'm done with the chart lesson. We'll be back again to do it again Monday. I hope you had a good trading day. I hope you learned something today. I hope you, if you need to, go back and listen to my soapbox a few times, because that's the secret. That's the holy grail, all in a nutshell, in 20 minutes. That's your holy grail to trading, and I stand by that. I put my reputation on it. That's the holy grail. There is no other holy grail. So I'm going to wrap it up. We'll be back again to do it Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.